Good evening, everyone, and welcome to Luxcess Group Market Review webinar. Guys, I trust you have all had a fantastic week in the markets and are looking forward, of course, to the week ahead. Guys, we have some brilliant content to go over tonight. Of course, last week we had a lot of activity, a lot of fundamental activity taking place, and we're going to review that and look to take advantage of some of the macro data starting to come out of the markets. So guys, before we go to review last week's fundamentals, of course, we had a position analysed on the Aussie US dollar. So if we take a look over to the Aussie US dollar. So this is what we were looking at last week. We were looking at a buy limit at 70.25, stop loss at 0.7000, and a profit target at 0.7085. So we were just looking to take advantage of a counter trend movement in the markets here. We were going into this position with a fairly low risk in terms of what we're putting on the table in pips. Our stop loss was only 25 pips, so with an expectation of 60 pips. So good risk to reward counter trend position there. This wasn't, we weren't looking at anything long term out of this. This was very short term that we were looking at. And guys, if you can take yourselves back to the chart that we had last week, we can see how it's played out this week. So we saw the sellers come into the market pretty much on market open. And this caused a little bit of a gap within the markets, and the sellers again pushed prices down to that 0.7025 price level. Unfortunately, from the lows, it did just, I believe, apologies, one moment. The lows, there we go. So did just miss our entry just by 1.5 pips before ultimately going up to its profit target quite nicely. It's very slow burner, this trade. Took a couple of days to meet the expectation, but met the expectation. Unfortunately, it didn't come down to pick up our trade position. It just missed our order by just 1.5 pips. So rather unfortunate there, guys, not to have our entry triggered into this position. As of course, the expectation was met quite nicely. It was a very slow, consistent move up to towards that 70.86 price level, and we're starting to see the sellers come in to the market. And I mean, that second arrow was a lucky guess on what we were seeing there, and small movements to the upside, and we've just began to consolidate between these levels, which again was what we were expecting, but then ultimately for the sellers to come back into the market and push prices lower. So I still think there's some good opportunity on the Aussie US dollar, but I think if we're looking at it from a buyer's perspective, then we're probably not going to get the best value out of our position, and it's not got the highest probability. Although we have interest in the Aussie US dollar still, we'd be looking to look from a selling perspective. So we would be expecting to looking to place a sell order within the market and allow the Aussie US dollar to continue on its primary trend. Its primary trend is that of a bearish trend. If we take a look on the daily time frame, so we can see a bit more data. You can see it's been fairly bearish now for the Aussie US dollar over, especially over this year, coming into the year with prices sort of around the 0.73 level, and now trading back down at the 70s, 80s. So I would expect to see the sellers come into the market and continue to push lower prices. But for me, in terms of our interest with the Aussie dollar, although I do hold a good bias for the downside, I do expect the sellers to come back into the markets and push prices lower. I need to see a little bit more confirmation before I enter. So, for example, here, ideally, this this would have provided a good technical entry into the trade position. Here, however, did we break the highs? What's the highs here? 70, 90, 77. Okay, so we just failed to break the highs of this structure from this price movement. Ideally, what I would like to see now is a movement to the upside to break the highs of this structure, and then a strong rejection back down below this level at the 70.86, and pushing prices back down on the 4-hourly to the 70.65. If we get a good break of that structure and a strong rejection on the 4-hourly, then that's going to be a fantastic market signal for us to take a short position. But until then, we're going to have to be a little bit patient with the Aussie dollar. So unfortunately, just missed our profit target, our entry by 1.6 pips. I mean, guys, depending on what broker you're with here, this is just a generic chart on TradingView. Depending on what broker you're with, you may have been filled. Guys, just type in the box for me. Was anyone filled into this position? Okay, so a little bit of a mix. Some people were, some people weren't. Okay, so fantastic, guys. For those of you that did catch that, unfortunately, where it did miss the entry, and that has been a little bit of a common theme over the past couple of weeks. It's missed our entry by all but a few pips, and then it's moved on to meet its expectations. So, we'll bear that in mind, and moving forward, we'll be a little bit more generous with our entry to ensure that the market picks up our position, and then, of course, we'll capture those movements and ultimately capture that profit. So a little bit disappointing there with the Aussie US dollar in terms of not filling the order, but not a problem. Guys, we have a fantastic chart to look at today, and we'll visit that after the fundamentals. Okay, so does anybody have any questions? Does anybody have any questions regarding last week's planned position? Just pop a yes in the box if you do, and I'll give you a moment to write out those questions. If you don't have any questions, just pop a no, and we'll move on to the fundamentals. Okay, fantastic. So moving on to the fundamentals, guys. Last week was quite an active week in the markets. We had a lot of events, major events taking place, and this week we have more of the same. But I feel that the asset, the currency pairing that we're going to have a look at this evening is going to navigate through the majority of that data, and it shouldn't be too affected by what's taking place this week, but we'll move on to that shortly. So last week, guys, we started off Monday morning, or Monday afternoon, sorry, with core retail sales and retail sales data for the US dollar. These came in above expectation. We saw some positive dollar data entering the market. This was a good sign for market participants. As we mentioned over the past couple of weeks, the dollar with the data with the US dollar has been a little bit consolidative, if you like, a little bit consolidative since we saw, that run of, fantastic positive data coming out of the US. We've started to see, a little pullback on that and a little slowdown in, in that expansion. But, core retail sales and retail sales, some fantastic figures in there. Previous figure, was previously was minus 1.8, but that was actually revised to minus 2.1%. So, in core retail sales, guys, we've got a 3% swing there. That is huge in terms of that difference in data. I think last week was a bit of an anomaly, in terms of data. February, so the data for January, I suppose this would have been for, was obviously quite disappointing. So, not to worry. We're seeing some good data starting to come back into the US dollar. So this is something that we're going to bear in mind moving forward, guys. We're going to keep in mind this positive data starting to come back to the US dollar. What we need to see is this positive data coming back consistently. When we see that consistent data, then then we can look to start to take out some macro buy positions with the US dollar. But until we start to see that that consistent positive data, we just need to keep a note of events like these. So yeah, there was data on Sunday evening, but if we expand this, he was just due to conduct an interview with CBS and one of their shows. This wasn't anything major. If the chairman of the Federal Reserve is going to release new information to the markets, it's going to be done through a monetary policy statement, or it's going to be done in a press conference following monetary policy meeting minutes. So the FOMC meeting minutes. It would be in an announcement such as that. So when we see interviews taking place, or speeches after dinners, or evening dinner speeches, I should say. When we see these events taking place, we're pretty safe. We don't expect too much volatility within the market. Now, these events can happen quite regularly, but again, it's very rare that we see any volatility off of those events. So moving into the evening, we had Federal Chairman Jerome Powell addressing the markets again. He was due to deliver opening remarks at the National Community Reinvestment Coalition's Just Economy Conference. What a name! That just rolls off the tongue. That name there, the National Community Reinvestment Coalition's Just Economy Conference. Cool. So again, it wasn't anything major. Now, this was actually there was a slight error here from Forex Factory, and this is the first time that I've seen this with Forex Factory. The release time initially misstated at 60 minutes later than than what it was. So the data actually, they got the timing of the data wrong on this example, but it wasn't a major statement anyway. And for Forex Factory, that's the first time that I've seen that happen in the 5 years now that I've been using Forex Factory. It's the first time I've seen that occur. So moving into Tuesday, we had GDP month-on-month figures for the pound. These were some fantastic figures coming into the market, and manufacturing production month-on-month figures, again, a very large increase from the previous month's data from both events there. Now, we didn't see too much of a reaction with the pound when this data was released, and actually the pound started to sell off in the hours immediately after that data release. However, throughout Monday morning, Monday afternoon, and over the early hours of Tuesday, the pound had rallied quite substantially. Against the majority of its counterparts. So we think we saw, that prior bullish movement, and so that prior bullish movement, when we see movements with the currency to that level. So, for example, we saw, the pound US dollar, I believe it moved around 300 pips on the Monday. Very powerful day's price movement indeed. So when we see movements such as this take place, it's very rare that we'll see them continue off of the back of this good data. So that caught a lot of traders offside. So they saw powerful movements within the pound. Good data came into the market. So we were in a good bullish market before. There was good confidence within the pound sterling, and there was positive data being released as well. But sometimes we can see a negative reaction off of these, because this gives the market participants the opportunity to take their profits over after those powerful movements to the upside. So what we most probably saw with the pound, with that sell-off, was just the market participants using that good data to trap traders on the wrong side, and for them to be able to close their profits. So this would have been an institutional based movement, or a market makers based movement. Moving into Tuesday afternoon, we had inflation data for the US dollar. We had core inflation data just missing its expectation, and this did cause the US dollar to sell off a little bit. We saw although CPI data met its expectation, core inflation data was just missing out, and core inflation data is the more stable measure of inflation, because it disregards, or it excludes, food and energy. Food and energy prices are, of course, amongst the most volatile in terms of price. So if we look at crude oil, for example, crude oil can move 3, 4, 5% in a day, and of course this fluctuation in price alters the inflation figures. So what they do is they remove the food and energy sectors to just include more stable areas of the economy, and this gives a more stable reading in core CPI data. So that was quite worrying for the US economy. They were expecting to see some positive positive inflation data there, and this could postpone the next, the next interest rate hike. They were expecting, some positive data to come in terms of inflation and core inflation. So where they didn't get that, we saw, this is what we were referring to at the beginning of the webinar, guys. With the US dollar, with that inconsistency of the US dollar data at the moment. So, we're seeing that continue. We had fantastic retail sales data on Monday. Into Tuesday, inflation data was pretty disappointing. So until we see that consistent positive data coming back to the US dollar, we don't want to look to be macro buyers just yet. So a bit disappointing there for the US dollar. So Tuesday was the start of the main data for the pound sterling. We had a vote in the House of Commons in the UK, and they were voting on a Brexit bill, or a Brexit plan, and it was a withdrawal agreement. So the plans that we would put toward to European Union, and of course try and leave with a deal. So as expected, the government rejected this deal very convincingly. I believe it was quite a large majority that the government lost by for that vote. I think it was a majority of about 150, which was, that's a lot of votes. So that was rejected, and as a result, there were a series of votes that followed. On Wednesday, they went into the House of Commons again, and they discussed the potential of leaving with no deal. Okay, and that was put on the table. So the government voted on that subject, and they said, we are voting to take no deal off the table. So, of course, there it is again on Wednesday. So before that, we had core durable goods orders month on month for the US dollar, followed by PPI data month on month. Again, fairly disappointing figures for the US dollar. So, we might be a little way off seeing that consistency, and, that consistent positive data coming back into the markets. So although we had good retail sales data, elsewhere inflation data, core durable goods orders and PPI data have all missed the mark and been fairly disappointing. It's again a big day for the pound on Wednesday, with the annual budget release. Now, the annual budget release is usually a very volatile moment for the pound because it sets out the budget for the year ahead. Now, this was, of course, overshadowed by Brexit vote. So, although we saw, there was, of course, concerns and risks cited with regards to Brexit, but elsewhere they were expecting GDP to be not too badly unharmed, although, they have been revised down and they are expecting slightly disappointing figures compared to, of course, if Brexit wasn't taking place. But ultimately, the figures aren't too badly changed. So there was some positive information coming out of that from the budget, but I think again that was overshadowed by the Brexit malarkey taking place within the House of Commons. So moving into Wednesday, they voted on the no deal scenario, and that was again rejected, and the government was again defeated. And then finally they moved into Thursday, and on Thursday again they went into the House of Commons and they debated throughout the day. in terms of an extension. Can we give this an extension past the 29th of March? So this was a big one. We've rejected her deal. We said we can't leave without a deal, and we've rejected, extension. Or sorry, well, there we go. On Thursday, they voted on leaving on the 30th, on the 30th of March. And that was passed. So we will be leaving the EU on that date. So again, it was further defeats for Theresa May and her government within the UK, and this was again very, very disappointing and leading to further calls for a general election. But although we had these defeats for the UK government throughout the week, the pound still had a fairly bullish week last week, despite these defeats for the government. So it's seeming that the market confidence is coming away from this current government. So when we're starting to see the House of Commons and Parliament ultimately hold these votes, it's Parliament who's coming out on top, and the pound buyers are preferring that event. So it's going to be interesting for the couple of weeks ahead now, guys. Friday the 29th is going to be a very big day, of course, with Brexit. So we've just got 2 weeks to go, guys, and then we have this Brexit situation. It should be at the end. We should be out of the UK should be out of the European Union, and of course then we will I suspect the negotiations, of course, will continue in terms of trade. So moving into Friday, to recap and finish off, the Japanese yen had some high impact data. This was in the form of monetary policy statement. The policy rate, or the interest rate, was kept the same at minus 0.1%, and it's been that now for I think about 4 or 5 years. They're not looking to change that interest rate. They're looking. The Bank of Japan are keeping a negative interest rate for the foreseeable future. So the monetary policy statement didn't really reveal too much. I was expecting to maybe hear Governor Kurada, who's governor of the Bank of Japan. I was expecting maybe for him to come out and say that, amid these rising global tensions, they won't tolerate the Japanese yen being used as a safe haven currency. They've done that a few times in the past when there's been huge global uncertainty. So I wouldn't be surprised to see that take place again. But ultimately, we're safe for another week. Safe for another month. Sorry, these are monthly statements that take place. So fantastic, guys. This wraps up last week's data announcements. To move on to this week, guys. This week is going to be a little bit precarious. As I said, it's a big week fundamentally. There's a lot of events taking place. So we need to be careful. First of all, we have the monetary policy meeting minutes from the Australian for the Australian dollar. When did the meeting take place? Meeting would have taken place potentially last week, and they'll be releasing those meeting minutes. So the Australian economy's been fairly disappointing recently. It's had quite a lot of negative data. So we should start to see them mentioning the poor state of the economy within these meeting minutes. So we could see the Aussie dollar sell off quite quite powerfully from this event. I wouldn't expect it to be positive, but so for me, to be honest, I would look to stay away from the Aussie dollar over Monday until we have that data release, and we can review those minutes, and then of course we can better prepare ourselves for the week ahead with the Aussie dollar. So I would stay away from the Aussie dollar on Monday, and when we have that data released to the markets, then we can look to establish a bias with the Aussie dollar. Are we going to be long? Are we going to be short? At the moment, the technicals are saying short, so we need to see that fundamental support as well. We need to see the fundamental confluence. So we need to see both the fundamentals and the technicals saying short for us to look to take a short position with the Aussie dollar. So we've got to wait for that data to come out so that we can establish that bias. So moving into Tuesday morning, we have average earnings index 3 months on the year for the pound. So average earnings is the average wage increases, and over the the past the past 3 months now, wages have been increasing higher than inflation within the UK as well. So the UK economy has been pretty healthy. In terms of wages exceeding inflation, we haven't really seen that in the UK, consistently for quite some time. So it's nice to see the UK economy performing in amongst all of these Brexit events taking place. So Parliament are voting again on Tuesday evening. Again, they are due to vote in regards to Brexit and really finalising, the government's position on Brexit. There's going to be a lot of votes taking place this week, or a lot of motions that they're explaining. So the vote. Apologies, guys. I'm just trying to find the notes that I made on it a moment ago. Okay, so this vote again, as we've seen, on the so the deal that we're looking to proceed with to the European Union. So I don't really think much is really going to come from this vote, to be honest, because I don't think government nor Parliament are close to really agreeing a finalised route for Brexit. And considering they've just taken that extension off of the table as well, we really need some cross-party sort of collaboration really for for the UK to have an agreed path out of Europe, or out of the EU, out of the European Union. So it's again, more volatility, guys, for the pound ahead this week. For me, guys, I don't trade the pound very often anymore, and I haven't done over the past year or so. I'm not looking to trade it until we get Brexit out of the way. I think the pound's just far too volatile on a day-to-day basis at the moment. So, again, I'd expect to see large volatility with the pound off of the back of this vote. So moving into Wednesday, we have inflation data year on year for the pound at 1.8%. So inflation, the target for inflation is at 2%, and we've just seen that fall below that 2% level. We were quite comfortably above 2%. That 2% target, but we did slip under that last month. So it'll be interesting to see if inflation continues to fall while wages continue to increase. So this is the big one, guys. This is the federal funds rate for the US dollar, for the Federal Reserve, for the US economy. They are expecting to keep interest rates at 2.5%, but they were really looking for good inflation figures. If they had good inflation figures, then maybe they could have started talking about potential interest rate rises. So, I think it's going to be fairly dovish for this data event, meaning it's going to be fairly disappointing for the dollar. It's going to be quite negative, I think, and quite bearish. So I would I wouldn't be surprised to see a weaker US dollar, for the week ahead. Moving into the evening, we have GDP figure quarter on quarter for the New Zealand dollar. Expected to be a good jump in the previous figures, but the previous figures again were fairly disappointing, coming in at 0.3%, way below the forecast. So again, the forecast remains consistent, but expecting more positive figures than what we saw previously. Thursday is a busy day, guys. We have employment change and unemployment rate data for the Aussie dollar. These were both pretty positive last time round, I do believe. Employment change, far exceeded its forecast. Again, they forecast 15.2 thousand once again. But I'm not looking to buy the Aussie dollar. So even if we do see positive data, it's just going to provide a better level to sell. Okay, so I'm not expecting anything there too positive for the Australian dollar. In the morning, we have the Swiss National Bank's monetary policy assessment, and also the LIBOR rate and the press conference following shortly after. LIBOR rate, has been at minus 0.75% now for quite some time. Back into 2014, I believe it was. Yes. So it was 2.5%, and then they turned those figures to minus 2.5%, and it's just increased and stayed at minus 0.75% for now for some years, and we're not expecting any real change in that. The SNB can be quite unpredictable though, so be keeping a close eye on that statement. And again, I'll probably look to avoid the Swiss franc on Thursday morning. Retail sales data is shortly followed for the pound month on month. Very disappointing figures expected at minus 0.4%. Down from that huge 1% figure that we saw come in last February. So we have an EU economic summit taking place on Brexit as well, on whether to grant UK's request for an extension. Well, we've now taken that off of the table. So moving into the afternoon, we have a further barrage of data for the pound. We have the interest rate, official bank rate data being released to the market. Again, this is expected to stay at 0.75%. I wouldn't expect to see any change there from the Bank of England. The monetary policy summary, however, that will have some great information in, because of course we are now, just 2 weeks away from, well, under 2 weeks away from the deadline of Article 50. So we will start to see the Bank of England make statements regarding that event. So again, it's likely to be quite a volatile week for the pound once again. So as you can see, guys, so far, it's going to be a very, very volatile week within the markets, and going into Friday, we have more of that taking place as well. Friday morning, we have French flash services PMI data, and German flash services and German flash manufacturing. So I think it's going to be, the German flash manufacturing data, which is going to affect the euro most of all. And this is because, of course, German exports are a very large part of the European Union. So typically the euro tends to be affected, more so by that German manufacturing data than, say, French flash services data. So with German flash manufacturing, we've seen some very disappointing figures taking place, and we've actually seen the industry now in contraction. So this means that the industry is contracting; it isn't growing anymore, and this is a worry for Germany, because we're starting to see GDP figures coming out, almost negative. We're starting to see Germany just dodging a recession. And this disappointing manufacturing data is not going to help. It's going to make it more difficult for make it more difficult for the German economy overall. So I'm going to be, that flash manufacturing data for Germany is going to be the data that I'm, most focused on Friday morning. And then moving into the afternoon, we have inflation data and core retail sales data for the Canadian dollar. So the Canadian dollar is pretty safe up until the end of the week, where we have some data there. So with that in mind, guys, I want to go to the charts now and take a look at what I feel is going to be a great opportunity for the week ahead. Before we move on, guys, do any of you have any questions for me? Again, just pop a yes in the box if you do, or pop a no in the box if you don't. Okay, fantastic. So, guys, I was looking at the CAD yen. So we looked at this. Cool. About 3 weeks ago, initially, we first started looking at it about 3 weeks ago, and if I take it onto the 4 hourly, we can see a bit clearer actually. One moment, guys. Let me just sort out the charts here, so we can see what we were expecting. Apologies, guys. One moment. There we go. So we saw the Canadian dollar in this. There we go. In this channel here, moving steadily to the upside. and this support channel we saw was eventually broken to the downside, and the sellers sustained staying below this level. Apologies guys, I don't know where that's come from. I don't know how to get rid of that. Oh, it's the information for this. I don't know why that's oh, apologies guys, one moment. There we go. So this is what we were looking at. The sellers finally managed to sustain a the price below that that trend line, and what we've seen is now this movement to the downside, the movement that we expected. Again, we just didn't get filled on our order for this downward price movement, but now guys, we've started to see the profit take and the sellers come back into the market once again. And I'm just going to pop a fib over that level as well, because it does look as though, oh, apologies, here's a fib. Apologies guys. There we go. So I think it looks suspiciously like the 50% level as well, down to the low. So I'm just going to pull that over so slightly. So yeah, we were consolidating along that that 50% level on the FIB. So now we started to see a bit of rejection out of that price level as well, and out of this price structure. So I think there's good opportunity for us to look to finally get on those short positions with the Canadian dollar. And what an opportunity we have. We have a fantastic market signal here. This is a reversal strategy. This is a bearish engulfing candle. So this is a market signal that indicates that the sellers are in control, and it's expected, that we'll see lower price movements. So for me, guys, again, we've seen that rejection of that 84 price handle. Sellers have came in off of that level, and we've closed with that bearish engulfing candle. So we have multiple areas of confluence with this trade, meaning that we can build a very large argument for this trade idea. We're currently in a very bearish trend with the Canadian dollar, Japanese yen. We've just had this bear flag take place over over a few months. This 2 months this bear flag was, and we had this rejection here. And again, we've seen some smaller consolidation, and now we're getting our rejection again. So I would expect to see prices now start to head down to break the supports, to break the previous levels, and test the lows down towards 82.30. Then maybe a retest of that 83 price handle before eventually we see the price continue and head down towards those lows. So that's what I'm expecting with the Canadian dollar, Japanese yen, and it's gave us fantastic market signal to enter into this position. So I'm going to look to take full advantage of this opportunity. Let's decompress the charts. So for me, guys, this level here at the 84 handle has been a very powerful level over the past few weeks. We've seen a lot of price action taking place over this level, and the sellers, have been, coming in from this level, right back into February. So we've seen some good supply into the markets from this price area, and I would expect that to continue once again. And we've got the clear market signal for that. So we've got a fantastic opportunity, again, with a fairly small stop loss, but this time it's not a counter trend position. This is a trending position, so a position that's following the main price trend, and this is a position ultimately we can look to hold for a little bit longer. We don't have to look to exit the market as quickly as we did. So, for example, on the Aussie US dollar, the Aussie US dollar was a counter trend position, just with a very small expectation. This position, we can look to broaden our expectations a little bit. So, for me, guys, let's get this set out. I'm looking for a sell limit order. Of course, I want to get the best value for my position possible. So I'm going to look for a sell limit just at that next area of resistance to the upside, 83.73. Going to take a few pips off of that level, just of course to avoid our past predicaments over the past few webinars where it's just missed our entry and then gone on to our profit target. So we're just going to adjust that ever so slightly and take that into account. So 83.70 is going to be my entry into this trade position. My stop loss is going to be placed above that previous structure here, so above 84.05. So I'll just look to incorporate the spread at about 84.07, giving us a stop loss of about 37 pips for this trade position, which is a good stop loss indeed. So just going to leave that there for the moment while we look to build on our profit expectation for this. Where are we expecting to see prices end up? So I would expect to see prices look to retest down to these support levels. Ultimately, I wouldn't be surprised to see the 81 handle broken as we start to push down towards the levels before we saw that flash crash with the Japanese yen. So with that in mind, guys, my expectation, I'm going to be looking down around these levels for a profit target, and I'm just going to look for a break in these price lows. So what I would this is what I was expecting, to break these lows and then for us to see a bit of consolidation in the markets, and then that movement to the downside. But I think if we look to come out at this level, then we can wait to observe price action over these resistant levels, and then maybe take an additional opportunity and a separate trade. But for the moment, not going to be too greedy. So I think the previous lows is looking like a good potential profit target at around 80 to 40, giving us fantastic potential on our trade position. So let's go on to apologies, just go on to this. There we go. To this note and set it again. So profit target, we are looking at that expectation no, around the previous lows, so around 82.45. You know, giving us a fantastic potential profit on this trade position. So again, with this position, we technically, of course, it's supportive. We're currently in a macro downtrend with CAD yen. Fundamentally, we've seen the Canadian dollar have 2 months of negative GDP month-on-month data, indicating that, you know, we could see the Canadian economy in a technical recession, you know, by the end of this month. So again, the fundamentals are on our side for this trade position, and we've got some, you know, brilliant price levels that we've just approached with the CAD yen, in addition to getting that market signal of a bearish engulfing candle. So the CAD yen for me, guys, is looking like the trade for the week. You know, I would expect this to be, you know, a position of fairly good probability, because you know, so for example, higher probability than that Aussie US dollar. That Aussie US dollar was a counter trend trade position. This is, you know, following the primary trend, and we've got more areas of confluence than we did with the Aussie US dollar. So I've got high expectations for CAD yen for the week ahead. So guys, this is the position that I'm looking to take within the markets. Guys, do you have any questions over the CAD yen? I'm going to set this trade position just after midnight. So I'm just going to wait until we get out of what's known as the dead zone, where, you know, we don't have any market sessions influencing price within the foreign exchange. So, you know, where we don't have any of these events taking place, or any of these market sessions taking place, sorry, we can see spreads a little bit higher than usual. So I'm going to take that into account, and, you know, just to look to place this position after midnight UK time. Okay. Fantastic, guys. Brilliant, brilliant work. My apologies if it's been a little bit in and out this evening. The Wi-Fi has not been, connection has not been too strong today. There's quite a bad weather patch where I am in the south of England at the moment. So my apologies there if it's came up a little bit start and stop this evening. But otherwise, guys, you know, very, very well done. Went through some good fundamental events, reviewed some, you know, some great fundamentals, identified, you know, what our expectations are for the week ahead. We've navigated that, you know, and identified the CAD yen. So I wouldn't expect this to be, you know, as volatile as the other currencies in the market, because they, you know, it doesn't have as much fundamental influence on it. It's just it's going to be quite a technical week, I think, ahead for the CAD yen, and technically it looks fantastic for a short position. Brilliant work, guys. So we will leave it here for this evening. If you don't have any further questions, if you do think of anything, guys, don't hesitate to send myself or Bex a message, and you know, we can assist you, you know, further with that. Brilliant work. So I wish you all the best in your week ahead in the markets, everyone. It's going to be an interesting week. We've got a lot of fundamentals taking place, so, you know, I wish you all, you know, a very profitable week in the markets ahead. You know, it's going to be very volatile, as we've just mentioned, guys. We've identified this because it navigates us through that volatility. So, you know, we should have avoided what I think is going to be quite a an active week in the markets next week. And next Sunday, guys, we should be here this time. This evening. This time next Sunday evening. Reviewing some good profits made over this CAD yen. Awesome. Thank you very much, guys, for joining me this evening. I wish you all the very best for the week ahead. Take care, guys. Have a brilliant evening and a brilliant week. Thank you all very much for your kind comments. I wish you all the best. Take care and goodbye for now.